This case is about the ethics of taxes, looking at Sonoco Products Company. The ethics of taxes. What is the purpose of taxes? Taxes has been imposed since the early Roman Empire. Back then, taxes were based more on consumption. Today, taxes are imposed on income, payroll, property, sales, estates, and the list goes on and on. The purpose of these taxes today are to fund revenue for governmental expenditures. There is also the idea that taxes can transfer wealth to future generations by reducing the national debt burden. They also are used to change behaviors, like the case of cigarette tax. That leaves the question as to when is there too much tax? How much tax should be collected? Finding that fine line when you are paying your share, but not the overburden of tax. Then how should individuals and corporations conduct themselves as taxpayers? Their duty to the state is to pay your fair share to fund programs that you are using. Their duty to their shareholders is to increase market share and try to avoid tax.
Now, looking at Sonoco's company history, we can trace its roots back to the Southern Novelty Company, which was first founded in a little town called Hartsville, South Carolina, in May of 1899. They first offered a cone-shaped paper yarn carrier which was used in transporting of yarn to all of the textile companies across the United States. Sonoco grew tremendously, and in 1923, they changed its name from the Southern Novelty Company to the Sonoco Products Company, which commonly referred to today as Sonoco. They took the words, the first two letters from each of the word, and created its current state name. It currently offers several different areas within 4 segments of industrial, consumer, protective solutions and display, and importantly, packaging. Today, Sonoco has grown tremendously with over 19,900 jobs. They have an annual sales of approximately $4.9 billion. The company has over 335 operations in 33 countries, serving more than 85 nations. This leads to South Carolina's largest corporation in terms of sales.
The economy in the 1980s. The economy in the early 80s was struggling. Unemployment rates were rising. There was a recession in 1980 as well as 1981 through 82. Prior to the recession in 1980, there was an idea that increased inflation would lower the unemployment rate, and the government was trying to fight unemployment by raising the inflation rates. Unfortunately, this did not seem to be working and was just causing inflation rates to increase, with only having a small effect on unemployment. The second recession did seem to have some impact on inflation, as the inflation rate started to stabilize. There was also a stock market crash in 1987 that had people questioning how stable the economy was. Manufacturing industries were hit hard by these recessions, and some did not recover from them.
The actors in this case include Arthur Andersen, who is one of the big 5 accounting firms providing accounting services to large corporations such as Sonoco Products Company. They were also the same accounting firm that recommended that Sonoco establish a corporation for its company in the state of Delaware. The next actor, Charles Hauser. Charles serves as the Chief Financial Officer for Sonoco Products Company. He's been serving the company for over 18 years and is in charge of recommending to the Board of Directors on whether or not to continue its business dealings in the state of Delaware or move the corporation to the state of South Carolina. Next actor is Sonoco Products Company Board of Directors. They were empowered by the shareholders to make decisions based off the best interest of the company, corporation, and its shareholders. Next actor is Sonoco Products Company itself. It serves as a thriving company in the state of South Carolina. The taxes from Sonoco would help provide many revenues for the Palmetto State. The shareholders of Sonoco Products Company, next actor, are the hardworking citizens who invest in the company. They also are the same individuals who the company is obligated to. Sonoco Development Incorporation is the incorporation that was founded based off the recommendation of Arthur Anderson and is a trademark holding company which operates in the state of Delaware. Sonoco Products Company transferred its trademarks and patents to this corporation.
So here's the situation. It is the late 1980s. The corporate executives are in a meeting trying to decide how to increase profits to keep their shareholders satisfied. They have been through 2 recessions in the early 1980s as well as the stock market crash. They have seen the inflation rate start to level out. They are continuing to grow their company through expansion. One of their recent expansions was the acquisition of another company which put them in the plastic grocery bag industry. Sonoco made the Fortune 500 list in 1981, and by 1987 their sales had passed $1 billion. Things were going well for them, but they wanted to make sure they were doing all they could for their shareholders. They had received a recommendation from their audit firm, Arthur Anderson, to create a separate entity, a trademark holding company, and to transfer all the trademarks and patents to this entity. This entity would be incorporated in the state of Delaware. This would have no impact on federal taxes, but in the state of Delaware, corporations like this are exempt from taxes. Therefore, the parent company, Sonoco Products Company, can take a deduction for the license fees they pay to the subsidiary, and all the income from those trademarks and patents would not be subject to state tax. They felt like this followed their philosophy of taking sensible risks to protect shareholder value. The decision was made to create Sonoco Development Incorporated and incorporate it in Delaware. The patents and trademarks of Sonoco Products Company were transferred to the new corporation. It was important for them to prove their existence in Delaware, so an office was established there, an accountant in the area was hired, and they even held meetings in this location. Just to give you some additional information, many of the state governments were becoming aware of the tactics for companies to avoid tax by spinning off profitable parts of their company into separate entities that are incorporated in the state of Delaware or Nevada, where there are no state corporate tax. At the time that Sonoco Products made this decision to spin off part of their company, there were no laws that made them include the income in the state where the parent company resided.
Charles Hauser has to make an ethical decision to make the right versus right scenario where Sonoco Products Company serves as the individual versus the community where the state of South Carolina serves. He and the board of directors are tasked to maximize its shareholders' wealth. However, their company operates in the state of South Carolina. No taxes are collected from the revenue from the trademarks and patents of Sonoco Products Company. As one is aware, state taxes go to police force, roads, bridges, fire protection, etc. When Sonoco has a tax avoidance, because they are operating in Delaware, not paying state taxes in its home state, which also maximizes their shareholders' wealth. Sonoco could also move its operations to its home state and pay state taxes, which the community and the state benefits from their contributions to society as a whole? Should he recommend to the Board of Trustees that the corporation continue its operations in Delaware, or should he recommend that they move the corporation to their home state of South Carolina? What would you do if you were Charles? Should Charles recommend to stay in Delaware or move its operations to South Carolina? What should the Board of Directors do? Should the Board of Directors make the ethical decision of staying or moving? What is the ethical position that they should take?